Hello everybody, it's Rick Beck, Realtor with Keller Williams Greater Columbus, and I'd like to share with you my August 2020 monthly real estate market report. The real estate business affects us all, and this year, like in all industries, has been transformational to the business. If you are planning or even thinking about a real estate transaction in the near future, spend a few minutes with me just to see how significant these changes are. My job is to make sure that you have the best information available as you make these life-changing decisions. We're going to be talking about a lot of things today, about the economy, about housing recovery, where home prices are going, and what's causing people to move right now. I think this is interesting perspective from Morgan Stanley. Their chief investment officer, Lisa Shallett, says this: indeed, the worst ever GDP reading could be followed by the best ever growth in the third quarter. Certainly many businesses have been impacted, both small and large. Some ultimately had to close down. As we look at general economic numbers, we should look forward to seeing some significant improvement going forward. Now let's look at what's happening in the housing market. How are we recovering there? I put together a couple clips from several economists across the spectrum and what they're saying, and it's very interesting. It almost reads like a movie trailer. You see Realtor.com saying, astonishing rebound. Shockingly strong from Housing Wire. And Zillow says, stared the pandemic right in the eye and hasn't blinked. Meyer Research adds, has nothing been short of remarkable. Here's a quote that kind of sums up the picture by Realtor.com. Despite the crippling and ongoing coronavirus pandemic, millions of people out of work, a recession, a national reckoning over systemic racism, and a highly contentious presidential election just around the corner, residential real estate market is staging an astonishing rebound. We're seeing housing play a critical role in economic recovery. But if we really want to look at what's going on, we have to start to look at behavior. We looked at showing time to give us an indicator of people going out and looking at houses. As you can see here, the number of weeks since about the middle of May that we've seen weekly showings up as normalized back to January. We saw this dip down in late March and April, but is coming back. And people are saying, you know what, we're going to go out and look at that house. The reasons that we had for looking for a home haven't changed, and in fact, they may have become even more important during this time. I do believe a lot of that is pent-up demand. Those that couldn't get out in the spring or had plans to buy a home in the spring are now catching up. As we go into the fall, I think we're going to start to see that normalize out a little bit. But the showings and activity out in the market are very, very strong. Real estate analyst Ivy Zellman says, whether in terms of pending contract activity or our proprietary buyer demand ratings, the various measures of demand captured in this month's survey can only be described as shockingly strong in spite of the resurgence of COVID-19 cases. Looking at the National Association of Realtors Housing Market Recovery Index, this index takes four things: demand, supply, price, and time on market, combines them into an index. And you can see the dip down and rise back up here. And we're now at a point that is above the February 1st baseline. We're not ahead of where we would have been had we not gone through the pandemic, but that index is now reading above where we were on February 1st, saying that we are recovering well. So I think the question that starts to come up and is on a lot of people's mind is what's going to happen to prices? Quicken Loans came out and said this: the pandemic has not stopped the consistent home price growth we have witnessed in recent years. I think this is indicative of the recovery and coming through that. We've seen housing literally become more important through this pandemic. More important to people. Their needs become more important in really driving that demand. There's a large range of projections on what's happening with housing prices. Here's a collection of 9 experts and what they're saying about prices. So anywhere from a 4.4% appreciation over the next year, all the way down to a minus 1.1 depreciation. What the interesting thing here is that CoreLogic just revised their estimate. They originally said they were going to see about a 6.6% depreciation and have revised it up to a 1% depreciation. Most, 7 out of 9 of these experts, are calling for positive appreciation going into the next 12 months. The story right now across the country is that we look at listings. They're lower than they've been, even though we continue to bring listings to market. Now, this is the picture of a store that can't keep the shelves stocked fast enough before people come in and purchase the products from them. We can't bring homes to market as fast as people are coming in and buying them. If we want to look at the other side of demand, Move.com tells us this: the summer home buying season is off to a roaring start. As buyers flooded into the market, Realtor.com monthly traffic on their website hit an all-time high of 86 million unique users the month of June, breaking May's record of 85 million unique users. That's a quarter of the U.S. population. The other side of demand is to look at purchase applications. And what we can see right now is we've been through 11 straight weeks of year-over-year increase, meaning applications are higher this year than last year. Now, again, I think we're beneficiaries of a lot of weeks and pent-up demand. Demand is being driven by what I would call white-hot interest rates. People are saying now is the time to do what we're going to do. We can afford more home. We can afford the home that we want now. The payment's at a price that we can afford. Or they're just simply saying, hey, look, if we're going to do it or we're thinking about doing it in the next couple years, due to the interest rate environment, we're going to go ahead and make the move and make that decision because it makes more sense. Interest rates are forecasted and projected to remain low. But as the economy improves, we know that those will edge up. The gift of economic downturn is oftentimes lower interest rates, and we're seeing that right now. But as the economy improves, we should expect those interest rates to climb. Now, on the other side of why are people moving? What is causing them to make those decisions? And I want to bring some interesting information into the conversation because I think there are specific things happening right now that are causing people to say, we want to do something different. And this is a survey that came out of Realtor.com comparing an April survey of what people said they needed in a home to a July survey and what they said about why they actually moved. So if you look back, you see interior space, outdoor space, kitchen, and better technology were things they were looking for in April. When we look at July, why people actually moved, interior is still there. And now the desire to own is number 2. Home ownership rate in this country has gone up over the last quarter. That desire to own is becoming very important to people. Number 3, the move from the city to the suburbs. We're seeing data right now showing people say, I want to live in a less dense environment. I want to move from a city to a suburb because of the fears of maybe being in a tightly congested area or contracting the coronavirus. Number 4, more outdoor space. I want a yard for my children during this time because we're all at home. So we're seeing this come through in the actual data that people are saying, hey, there are different needs that I have. There are different things that are happening in my life, and I'm going to make a decision on the home that I purchase based on those. Another big driver of this right now, and I think we know this in our head, but data is coming in to prove it, is the plan to buy a home due to the possibility of remote work. Now, this is very interesting. 2 out of 3 of the buyers surveyed in the case said they are planning to buy a home that fits their needs for remote work. Now, I don't know if that means that 2 out of 3 are going to be working from home, but it definitely means that 2 out of 3 are saying that I have that need. I may be going back to work, but if this happens again, I want a place to work from. And this need to have a home that I can work from is extremely important today to people and driving a lot of these decisions that people are making to go out and buy a home. Here's something very interesting from John Burns Consulting that I want to bring in. It says, as states, cities, and counties around the country slowly reopen, we predict the great American move. This is big. For safety reasons, financial prospects, life change improvements, personal comfort, and employment, we expect a surge in household and business relocations over the next few months that will provide new strategic opportunities for the real estate market. Another interesting piece of information says home sellers nationwide realized a gain of $75,971 on a typical sale in the second quarter. That's up from $66,500 in the first quarter of 2020 and $65,250 in the second quarter of last year. The latest figure, based on median purchase and resale prices, marked yet another peak level of raw profits in the United States since the housing market began recovering from the recession of 2012. This amount of equity or potential profit gives owners the flexibility to make these life change decisions. It gives you options. As you know, real estate is an incredibly local business. So what about Greater Columbus or my suburban town or even my neighborhood? That's where I come in. As your local expert, I can provide in-depth data about the home you're selling or the areas you might want to move to. Here's the data from June, the last complete month for the Columbus MLS. This covers all or part of the 20 counties commonly considered Central Ohio. You'll see that closings in June were down 2.3% from last year. Not bad considering that those were contracts signed in April and May, the worst part of the shutdown. Contracts signed in June were up 7.4%, almost 300 more units than last year. Median sales price was up 5.7% for the month and 5.8% so far for the year. What is most alarming and follows the national trend, actually leads the national trend, is our inventory of homes for sale is down 38.4%. That is about a 35-day supply at the current sales pace. A market with less than a 120-day supply is considered a seller's market. We also have the ability to look at these numbers by county, town, zip code, or school district. For example, here is New Albany Plain Local School District. The first thing you'll see here is that the closed sales have increased 14.6% in June, but are down 14.4% for the year. In contract units are up 25.5% for the month. Keep in mind that there were only 47 closed transactions and 69 new contracts. In this smaller sample, unique situations can skew the numbers. Next, we see the median sales price rose 25% in June, and it's up 11.1% year to date. Before we jump to conclusions about the value of your home in New Albany, you must look at these individual sales to see if there's a lot of new construction came on market or some other unusual event. Another example I have is the Worthington City School District. Keep in mind this sample is much larger than just the city of Worthington. It's the whole school district. There are portions of North Columbus in this district. On the surface, we see closed units are down 29.1%. That's huge. Contracts are down 19.1%. Next, we see that the median sales price is down 8.1% in June and 1.8% year to date. Then you look further and you see that days on market is 11, which is incredibly short, and that there's, in spite of 101 listings being brought to market, there are only 47 homes available at the end of the month. A mere 18 days of inventory. So you might look at these numbers and think that this is a terrible place to invest your money. But with a closer look, realize that demand way outstrips supply and that Worthington is a great place to live, but no one is willing to move out to make room for you to move in. Again, the individual sales have to be analyzed to understand the price movement. We also have the ability to drill down to the actual neighborhood with this analysis. My point with all of this is that when you're ready to invest your hard-earned money in your next home, make sure you talk with a professional that's able and willing to do the research and explain to you why a particular town or neighborhood is a good investment. If you're investing in a stock, you would most likely research balance sheets and income statements. Neighborhoods also have assets and liabilities. The concepts are similar. Likewise, if you're thinking of selling, be sure that the realtor you choose can and will do the work to maximize your sale proceeds. If you've stuck with me this long in the video, let me say thank you for putting up with my geek out session. I am a realtor in Central Ohio, and I can help you with your real estate needs anywhere within the area. I can help you with buying or selling. I can also help with general consultation or just having a what-if discussion. You've got a question, I'll do my best to find an answer. If you're watching from a different area, please reach out to me. As a member of the Keller Williams family, I can find a great agent near you no matter where you live or want to live. My phone number is 614-758-8250, and my email is rick.beck@kw.com. See it on the screen. In the description below, I will provide links to all the different information sources that I quoted, as well as links to my website and my Facebook business page. My Facebook page, Rick Beck Real Estate, is an excellent source of current informative articles about homes in the real estate market. I post there at least 3 times a week. Lastly, if you've stuck with me to the end, message me and I'll send you my current buyer's or seller's guide, absolutely free. I also have a very special Millennials Guide to Home Ownership, also free, designed to help you plan for and purchase your first home. Again, thank you. If you found this helpful, please give me a thumbs up or subscribe so you don't miss out on my new content related to the business that most affects us all, real estate. Thank you much. Good day.